So, welcome back to our Conversations About Tax with Morag Wilson from Scott-Moncrieff, and today we're going to be talking about a concept called love, favour and affection and whether it might help you as our landlords. So if you're sitting there, if you've got a client who's sitting with a property in their own names and they thought, do you know what, I don't want to move it into a limited company. Yep. I've heard of something recently which has got a really interesting name to it, and I hope that you can tell me a bit more about it, but something called love, favour and affection. Could you maybe tell us a little bit more about that one?
Yes, so what we're seeing more of is particularly married couples where a joint property, the revenue starting point is that each individual has a 50% interest in the income, a 50% interest in the underlying asset. So that's what's called your legal ownership.
Right.
There is, however, a concept called beneficial ownership. And what that suggests is that although from a legal perspective it may be 50-50, you can alter your beneficial interest. Now, in order to do that, you have to demonstrate that actually one of the parties has more of a beneficial interest in this property than the other.
Okay.
And what we do to achieve that is a very simple deed of gift, whereby one spouse transfers some of their interest to the other for love, favour and affection. And because it's between spouses, there are no tax implications. And thereafter, having done that, we can put the beneficial interest, for example, 60-40 or 80-20. And so one of the spouses will have a much higher interest in the income and essentially in the underlying asset. So what we do at that point is that the revenue accept that as long as there's a form that goes with it. So you fill that in, and from that point forward, it means that your income can then be taxed in something other than a 50-50 ratio. Right, and that's helpful where you might have one spouse who is potentially a lower taxpayer than the other. So we're taking income that's potentially being taxed at 41%. We might get it under somebody's personal allowance, or it may just sneak into the 20 or 21. So as a family unit, there's actually quite a saving to be had in doing that. And that declaration lasts for as long as, until such time as something changes within the marriage, or at the point where they maybe want to sell the asset, we would suggest that we stop the declaration there, and then it's back in the 50-50 and the gain falls into a 50-50 ratio.
So in essence, someone's on a lower rate, not really, maybe is caregiving to family or something like that. The rental income, say 10,000 a year. We could say, right, the higher rate taxpayer says, well, actually, I only want to take 5% of that, but you could have 95% of that, and it probably is still going into the communal pot, but that person it's beneath their personal tax allowance, and so hopefully shouldn't be paying too much tax on that.
Absolutely.
So that seems like a really good option. And so that form, would someone come to you to fill out that form, and where do you put the form? Do you just send it to HMRC? Do you just stick it in a safe, or
yes,
what
so
do you do with it?
When you send in the actual HMRC form, you have to send the deed of gift with it.
Right.
So the revenue won't accept the form without the deed of gift. So we have the wording, and most lawyers would be able to draw that up as well. We certainly suggest, although it's not a requirement, that you do get somebody to witness a signature. It needs to be both parties that agree to this. So again, the revenue won't accept it.
To accept the gift.
Absolutely, yes. So both parties need to do that. And then we tend to get an acknowledgement from HMRC saying, thank you very much, this declaration is valid from such and such a date. And that's it. And that's then reflected on the annual tax returns for the individuals.
And so you can't predate the gift, you can just really...
You would tend to do it from the deed of the gift.
Okay, well that sounds like a really good option, as long as there is love, favour and affection.
Absolutely. No, it works very well, and it's not just properties. You can actually you can do it with any other capital assets as well. And you can vary that declaration as many times as you want. If 80-20 no longer suits, you want to move it, then that's absolutely fine. So it's not a set in stone forevermore, which again is quite handy as well.
Absolutely.
And doing it this way avoids changing your title deeds, because actually your legal ownership is still exactly as it was on the title deeds.
Well, that's a really interesting question, because I know I've had clients saying to me, look, we really want the property in my name because I'm on maternity leave or whatever it is, so I don't want my husband or my wife or whoever it is, having too much of the income from it. But we said, well, what's going to happen when it comes to renewing your mortgage?
Yeah.
Because the mortgage will be, yes, they'll look at the property in its own right. Is it self-funding? Is it going to cover the mortgage interest costs, etc., etc.? Can you stress test it? But yes, But the reality is that they do like the fact that somebody there who's earning over 25,000 in the background who can help out. So hopefully it shouldn't make too much of an issue.
No, I've never seen a bank or a lender actually question it, because again they can look at the title deeds and see that it's still in the names of the parties concerned.
Because I have seen it. We, as under the Code of Practice, we do have to have proof of ownership of the property, and so we can go on to Registers of Scotland, download them, and I have seen Love, Favour and Affection quite a few times recently. But what I don't think I have noticed is the percentage split on there. So interesting enough, I would probably need to know that, so that I can then apportion the rental income on their statements.
Absolutely.
I mean, I suppose ultimately it's up to them when they're doing their tax return to make sure it's properly apportioned in terms of the legal and the beneficial ownership. But that certainly sounds like a really good option. I think you might have a lot of people phoning you. But yes, as I say, it needs to still have a lot of love, favour and affection there.
It does, yes.
So thank you very much for your time today, Morag, and for listening to everybody out there. As you'll know from Chapman's, we always discuss a wide range of issues. And if there's any other burning issues that you'd like us to investigate for you or to talk about, then please do get in touch with us. And equally, if you have any tax-related issues, I'm sure Morag would be delighted for you to get in touch with her, and her contact details will be at the end of this presentation.